Welcome to Inside Tax Policy. I'm Sindhu Bloom.
And I'm Scott Michalowski.
We're so pleased to be joined today by Peter Michalowski, who leads our state and local tax practice. Peter, welcome.
Thank you. It's great to be here with you.
To our casual studio with a fire. So let's start out with state reaction to the tax reform bill, which became law. And do you see any kind of uniformity or trends in how states are reacting?
Well, it's a little bit of a mixed bag, and we're really in the middle of it right now as the state legislative season is in full force. So you have some states like New York, California, that are very focused on the loss of the state and local tax deduction on the individual level, and trying to figure out how to mitigate that. You have other states that are just going through their normal conformity process. Then you have states that are looking to either conform to certain provisions and decouple from others. So really exciting time right now and a lot happening. And I think we'll know a lot more over the next 3 to 6 months.
I was curious about that. So you had said earlier in our last time we spoke that we should expect to see a lot of activity at the state level in the beginning of the year, and we're seeing that, it sounds like.
Yes.
But what is the timeline? Since state legislative sessions tend to vary so widely throughout the country, what does that look like? And frankly, how are we dealing with the uncertainties? We're still not sure what many states are doing.
Sure, great question, Scott. So you have some sessions that where budgets have to be enacted by the end of this month or April. You have others that will go through June, and some will go into the summer. I think from how do you stay on top of this and how do you deal with the uncertainty? Obviously, stay engaged with your government relations folks. Also, stay engaged with your industry groups because there are certain issues that you may want to voice your opinion on. I think the other thing to focus on is just scenario modeling, and really thinking through the different ways the states could conform or decouple and what the impact has on your business. I think a lot of the focus in that area has been around the toll charge, but now people are starting to move into some of the other big issues like GILTI, FDII as well.
Okay, and let's talk about tax rates. So the federal rate went down. Are you seeing that happening anywhere or hearing about that happening anywhere in the state level?
So from a state perspective, I think rate reduction is more of the exception rather than the rule. We've seen a couple of states, Georgia and Idaho to name two, that have had some minor rate reductions, but I wouldn't expect many other states. For many of these states, there's potential for a little bit of a windfall as some of the base broadening provisions come in and the states keep their rate constant. There's an opportunity to raise some revenue. So a lot of this is going to depend on how these states conform to the various provisions in the Act.
Can we talk about some specific provisions coming out of the federal law, such as 965? What are states doing with that specific provision in response to repatriation? And are there other provisions that states are looking at very specifically, maybe GILTI or others like
sure.
that?
So with respect to 965 and the toll charge, I think there's been a lot of discussion around how the state's going to respond to that. I think what we've seen for the most part is states looking to how they treat Subpart F income. And in many cases, there's an exclusion for Subpart F, but there's also the potential for add back of expenses related there too. So companies are going through that analysis to do that calculation. You do have some states that have who don't conform to Subpart F, like California, that you need to look at more closely. But the Subpart F regime at the state level is typically the mechanism in which the toll charge is going to be dealt with. I think with the way it's going to be calculated on the federal return, it's going to be interesting how that flows into the state returns because it's really being done on a separate calculation based on the most recent guidance, and how that comes into the state tax return. I think there's still a lot of unanswered questions.
All right, Peter, thank you so much for joining us.
Great, it's great to be here with you. I'm sure we'll be talking soon.
Yes.
And thank you very much for joining us. Stay tuned for more and take care.